Hello everyone, Susie from Esoteric Trading Solutions. I hope you're all well. I hope you're living your life according to the way you want to live it. Life is incredibly short. I hope you're looking after your parents. They don't last forever. I hope you're looking after your family and all your friends, and you're being kind to yourself as well. I hope you're looking after your dear, beautiful animals, being kind to them, treating them with respect. And I hope you're also treating just strangers with respect, just to make this world a better place. Can't get any worse than what it is, seriously. Something caught my attention, and when I get motivated to do a YouTube, it has to honestly catch my attention. And it was this article from Zero Hedge, and basically it's by Tyler Durden, and it just came out recently, the 12th of November. It's talking about the world's ultra-rich preparing for a market crash, warns UBS. And the ultra-rich are very worried, according to UBS, in that there's going to be a global slowdown, and the wealthy investors are very concerned that there's going to be a significant stock market crash or correction by the end of next year. And I've had that view for some time. I mean, the market just keeps going up and up and up, even though interest rates are actually higher in yield, lower in price. They did a survey of 3,400 high net worth respondents, and that's people that obviously have millions of dollars over and above their house or other types of investable assets. And the respondents said they'd sold 25%. They said they'd sold their risk assets, including equities, commodities, and high yield bonds, and basically gone into cash, I should say. Also, they were concerned about the US-China trade war, and again, the US-Chinese trade war is very reflectant of the Great Depression. If you know what caused the Great Depression, obviously you had the Roaring 20s in the 1920s, 29. Then you obviously had the stock market crash. There was a severe drought in America at the time, so that really hit industrial production quite dramatically. Plus, it also hit consumer confidence and consumer sentiment quite dramatically. Also, there were trade wars. Okay, there was protectionism in the late 1920s, early 30s. Okay, so with trade wars, there was complete restriction on what trade could go where and what could come into America or go out of America, and that's what you're pretty much seeing today. And that slowed down American growth quite substantially, as well as world growth quite substantially. Then with the lack of consumer confidence and sentiment, you basically had the American consumer not spending. Now, the American economy is based on 70% of consumers spend. And when you had that sort of situation where the consumer is not spending, again, it feeds into production, which reduces production and increases unemployment. So at the peak of the American Depression in the 1933s, there was something like 15 million people unemployed. Many black people were unemployed down south. Lots of people unemployed. Now, if people are unemployed, they have no revenue or no income to spend. And again, that feeds into the economy. And as I said before, if the American economy is based on 70% of consumer spend, then essentially the economy is not growing. And like we saw with trade wars in America, that also stalled the economy quite badly with protectionism. And also coupled with that, the monetary supply within the system was actually contracted. In other words, the government wasn't spending any money either, which made the recession or the depression even worse. So it went from a recession to a depression. When the government stopped spending, and that's what we saw, the government actually stopped spending, it actually made a recession into a major depression. Now, as you saw in Nazi Germany, when Hitler got into power in 1933, the way he got Germany out of this shocking depression was to start spending big time. And he started massively spending on defence for Germany, massively spending on infrastructure projects like building the Autobahn, getting people working, all sorts of people working, and spending heaps of money in industrial types of scenarios and that sort of thing. So again, that's how Germany got out of the depression, and that's why the US, this is very annoying, this thing here. That's why the US basically, was a bit slower to get out of the depression than the Germans were, because Hitler just kept spending money and started increasing the defence force. Under the previous treaty back in 1919, he was only allowed to have 100,000 people in the army and the Defence Force. He actually broke that treaty and basically said, look, I'm going to put as many people in the army as I want. And that's pretty much what he did in the Defence Force. So he actually got Germany out of the progression. So what I'm saying is I sort of believe this. I do think there is a risk that the US equity market could come down quite savagely. And there's reasons for that, which I'll take you through. And I think risk assets could come down. Now, 80% of the respondents said that they expected volatility to increase. Now, volatility on the VIX is an all-time low. It's around 12, which is very low. At its peak, it could be anything up to 35. 55% believed a market plunge could occur before the fourth quarter of 2020, which I think is very, very interesting itself. Now, this is the VIX here, and it's around 12, 13. At its peak, it's been around 30 when it's been extreme market concern and extreme volatility. So I think if the ultra-rich are expecting a fall, I think the ultra-rich are pretty smart, and they've certainly raised their levels of cash, okay? So, pretty much they're not very optimistic about returns, and I think that's something, we should obviously think about ourselves when we go through our own particular holdings. So if we look at the returns of different markets, you'll certainly see what I'm talking about, and then we'll obviously look at, the alternatives to those different markets to where to potentially invest. And what do I believe, and how am I thinking in terms of the future outlook of markets as well? Also, coupled with that, and this was just put on on Twitter by Matt, coupled with that, US household debt climbs to 13.95 trillion in 2019, the third quarter, which back here it was just over say 7 odd trillion or so. So we've had massive influx in debt. And a lot of that debt obviously is mortgage. Then we've got home loan, equity, car, credit card, and student debt, which has been rising as well. So, the thing is, it's okay if people have debt, providing, they're employed. And employment is still, very high in the US. But if people start to become unemployed and they're carrying huge amounts of debt, then that certainly is not going to be great for the market going forward, particularly the consumer market in the US particularly. Okay, so that is definitely something to keep an eye out for as well. Also, this is another article that was posted just on the 14th of November, a couple of hours ago. $69 trillion of world debt in one situation, and as you can see, this is, incredibly hefty. Of that percentage of world debt, the US literally has 31% of that world debt at 31%. Then you've got China, then you've got Italy, and then you've got Japan. So massive amounts of debt. And the reality is the only way US can get that debt down is they start exporting goods and services to the rest of the world to pay for their credit card. That's the only way. The US has to earn more income to get their debt down. And if they can't get their debt down, then this debt is going to continue to propel out of proportion. Also added to that, if interest rates start rising, the cost of that debt is going to rise quite substantially as well. So you really need to keep that in mind as well when we talk about, interest rates rising. So if we go to, just some indices here and have a look, basically have a look at these indices. Oops, get out of that, sorry. We'll see that, overall, fixed income is starting to rise, okay? Yields are starting to rise. Now, if yields are starting to rise and people are carrying debt, it's going to really hurt the consumer that's carrying debt in terms of the mortgage, and it's going to really hurt the government that has huge amounts of debt as well. So I have alluded to this fact that interest rates are definitely rising. Australian interest rates are, up anything from 15 basis points to 26 basis points for the 3 months. Again, rates are rising right across the board. So you can look at this and look at rates right across the board. They're rising everywhere. And that is something we need to keep an eye on, particularly with the equity market. If yields rise, the equity market comes down. Even in Japan, where rates were notoriously low, they've been rising. Now, to put this in perspective, a rise in interest rates of 24 basis points or 15 or 10 is quite a big rise in interest rates, particularly when the base of the interest rate is low, okay? Interest rates have been very low, or they've been negative, and all of a sudden they've risen 18 or 20 basis points. That percentage is huge. So if you put an 18 basis point over a negative rate, the percentage of rise is huge, okay? So in other words, these interest rates have risen quite substantially, and we see rates in Portugal rising quite substantially. And again, Portugal is another country like Italy that could fall over any time. Italy's got the third largest bond market. Don't forget that. Rates in South Korea have risen quite a lot. The United Kingdom's gone up quite a lot, and the US has gone up quite a lot. With the US, we can see here, looking very carefully, that there's been a steepening of the US interest rate curve. So in other words, they're buying the short end. As you can see, they're buying the short end. That's why that's down. In other words, they're buying short yields, and the long end is actually blowing out. In other words, yields are going up, and that's a steepening of the yield curve. Okay, so, we do need to keep an eye on this, because equities are priced off, a 10-year rate or a longer rate. And the thing is, as rates go up, the price of equities come down, okay? Another thing we need to keep an eye on also is corporate debt. Corporate debt is starting to blow out. Now, that's the other side of the balance sheet, where corporates will fund the other side of the balance sheet, not just through equity, where they don't tend to, fund their balance sheet through equity. They can also fund their balance sheet through corporate debt, and we do see that corporate debt is starting to rise as well, okay? So if we pull this out, it's a bit hard to pull out here. If we pull this out, you'll see over a 3-month view, debt is starting to rise as well, okay? And you can see this here, right? So, again, we need to keep an eye on debt, because debt is rising. If debt's rising on the debt side of the balance sheet, then equities should become cheaper, okay, because equities at the moment are still very expensive. If we go into the equity market and just have a look at the equity market and have a look at the returns from the equity market, you'll basically see that the equity market, in my mind, is very, very overpriced, okay? And it's not surprising to me that these high net worth individuals that UBS actually surveyed are concerned about the US equity market coming down. I just think it's very, very unsustainable, and I do believe it is a risk, okay? So if we look at just the US equity market, over year to date, or even over a year, year to date it's up 20%, okay? It has gone up a lot since 2008. We saw the Dow in 2008, don't forget, at its lowest peak, 5,800. So now the Dow is up, it's nearly up to 28,000, okay? And, really, when you look at the profit and loss of companies and businesses, it's been because they've cut costs, not because the revenue line is growing astronomically. And that's always a concern, okay? Even the NASDAQ, which is tech, is up 28%. So, there's been some lofty moves here in equity markets, and it continues with no abatement. Even in China, and China's in a recession, technically, China has GDP growth, or gross domestic product, at 6%, which can't sustain the people, of that country. China needs to have a growth of domestic product of about 8.5% to get people out of unemployment and to get them working in China with this huge, massive population of 1.4 billion. Okay, so, equity markets are up a lot, and the reality is, how much can equity markets continue to rise? If we look at Italy, for example, up nearly 30%, and yet in Italy, like Spain, is in technical recession. In other words, things are very bad in Italy. They could not be able to pay back their debts to the capital markets, and yet the equity market is up 28%, and over time is up even more. So, you've really got to think something's not quite right here. If we go to a 3-year rate of equity markets in Italy, it's up 40%. If we go to the Dow Jones, it's up nearly 50%. The NASDAQ is up 62%. These are massive figures, seriously. And you just wonder how long this is sustainable. If we go for over a 10-year period, the Dow's up 172% according to this, if this is correct by Coifin. S&P is up 184%. Honestly, even Moscow is up 123%. The NASDAQ composite, sorry, that's what it's called, is up 291%. These are massive figures, seriously. And I just don't believe this is sustainable, not when interest rates are starting to rise and the yield curves are starting to steepen. In my mind, it is not sustainable. If we look at the macro story, again, which is not the micro story of individual stocks and corporate story, but still the macro and story is very important. We go to the macro story of world economics, for example. The US has only got a GDP, a gross domestic product of 2%, which is extremely low. If the US wants to start paying back its debt, it's got no way of paying that debt down. No way in the world, okay? It's going to be absolutely, in trouble with interest rates rising, because the interest rate expense on their debt will just, go out, just so much. And it's going to cost them so much money, right? According to the stats, inflation's at 2%, which I don't believe at all. Utility bills in Australia over the last 10 years are up 50%, and I'm sure the same things in the US. I don't believe that the CPI, the Consumer Price Index, is up 2% or 1%. I actually believe that we're in a high inflation environment. Everything is up. Utilities, house bills, education, the cost of transport, the cost of food. Food price inflation the last couple of years is up 48% or something. So I don't believe these figures. I just don't. I believe monetary policy is completely wrong. Interest rates should be a lot higher. The cost of money should be a lot higher, okay? So we have a look at government debt. According to this, it's 106% against gross domestic product. Very, very high indeed. US has a population of 327 million, but according to stats, about 100 million people are at least on food stamps. Very, very bad. According to these figures, the jobless rate is 3.6%. Unemployment, but again, I'm skeptical about those rates as well, because in Australia, they call someone that's unemployed, they call someone that's, employed, fully employed, if they only work 2 hours a week, okay? And the way they do the surveys are very, suspect. They knock on your door, if they can't get you, they assume you're employed, okay? And it also has a 40,000 standard error, right? 40,000 people employed standard error, right? The Eurozone says that 7.5% of people are unemployed. Eurozone growth is shocking at 1%. China, as I said, needs higher growth than 6%. It has to be around 8.5% at least to get, 500 million people out of poverty. So China's in a lot of trouble, and it's also got high debt as well. And Japan, 1.3% debt. How can the equity markets be so high, when the GDP growth is 1.3%? I mean, think about it, seriously. If we look at Japan's debt against its GDP, it's huge. It's even worse than America, and it has an aging population, and the list goes on and on and on, okay? All these stats, are pretty similar. GDP growth is abysmal. Sometimes retail sales is holding on or doing well, yet industrial production is very bad and yields are rising everywhere. And it doesn't bode well for the future going forward, okay? If we look at foreign exchange, for example, again, the US has done very well in terms of foreign exchange. It's actually appreciated against every other currency, except the yen. But the reality is this is not great for other countries either. Okay, so, in my mind, there is a risk that the equity market can come off quite quickly. And there's certainly a risk that yields are rising quite quickly and corporate debt is going up quite quickly. So, in other words, I think the high net worth of the UBS survey have a right to be cautious, because, to me, an equity market up of over 170 odd or 200% over a 10-year period, in my mind, is just not sustainable, and it certainly is a concern. A concern as far as I'm concerned. So where does that leave us for the future, given the background that I've outlined to you? And these are my future assumptions of where I think, where I think the opportunities are going to present themselves in the next couple of years. And it's not an exhaustive list, clearly, because, we'd be here all day, seriously. But, I believe going forward there will be weaknesses in economies globally, and we could enter a period of recession / depression if unemployment starts to rise, okay? Now, I do think in the next couple of years, unemployment will start to rise, and this will be brought about by crypto technology. And the reason for that is crypto technology, as you know, there's 4,000, 3,000, 4,500 coins or whatever it might be. And crypto technology, sorry about that, gosh. Crypto technology can bring about lots of changes, particularly in accounting. It can automate things in accounting. It can automate things in accounting where you don't need accountants anymore. It can do supply chain management where you don't need, where you can see, and trust that the quality of the food or the pills or whatever is absolutely unique and proper and it hasn't been tampered with. It can also do legal contracts with smart contracts. It can do lots of things in terms of compliance. Cryptocurrencies themselves, i.e., for example, Ripple and XRP could become banks, okay? So what this is going to lead to is more competition with reduced fees. Banks as we know them, traditional banks, and there's 48,000 of them globally, are not going to make the money they used to make. And certainly banks in the last 30 odd years have been reducing the people they employ, okay? So we will continue to see that situation as banks, their demise gets worse and worse. And we even saw it with Westpac coming out with their profit results and their cash results. They weren't as good as they have been in the last 10 years, okay? So that's a fact. Traditional banks will start to lose money and will not have as many clients because the clients will know about other options like cryptocurrency. If you do cryptocurrency with Ripple and XRP or someone else, it's going to save you a lot more money, okay? So the clients will become a lot more savvy and a lot smarter. So we know there's going to be a revolution in payments. There's going to be much more online shopping globally, access to global markets. There'll be a reduction in fraud going forward with cryptocurrency. And these are some of the things that I'm thinking about, okay? As we know, the monetary system itself will change as we know it, where it's not controlled by governments. It's not controlled by governments continue to issue paper like the US, where they just completely getting themselves into more and more debt and trying to take more and more taxes off the individual, like in other countries, for example. We may even find with cryptocurrency, and I do believe this, that there will be a complete change of social structure. The poor will have more access to things, and I'm really, really hoping that, and that there'll be more meritocracy. So in other words, out of 7.2 billion people, we don't just have 4.1 billion people, in abject poverty, and we have 2,000 billionaires that own the wealth of 4.1 billion people. To me, that is a crime against humanity. The wealthy have too much money. The extreme wealthy that are billionaires have too much money. And in my mind, that shouldn't be. With cryptocurrencies, as I said, we'll see less fraud, which is a great story because the money will go to where it needs to go, rather than the existing system where money, is taken, and not going exactly where it needs to go, okay? We will see, obviously, e-commerce stronger. In my mind, going forward, there'll be much more accountability for where things are, what's happening with money and everything else. And in my mind, I'm hoping there'll be more like a socialistic type model, like in Holland, where people are actually helped. They're not left on the street if they have mental illness and those sort of things. I mean, in Western culture, I don't know what it's like anywhere else, but certainly in Australia, animals get better treated than people do. People are on the streets, they stay on the streets, but if it's an animal, the animal gets looked after, okay? So in my mind, something's got to change. Also, cryptocurrency will provide a more stable opportunity in my mind to unstable currencies. So we have seen that where, the Bolivian whatever, the Argentina peso, the Turkish lira, their volatilities have been worse and shocking. They've been devalued, and yet, less stable than, say, an XRP, for example. So people will shift out of government currency into a cryptocurrency that's more stable, where they can control their own money. Point 15. We'll also find there'll be a cut in the middle person in the costs, and costs will reduce quite substantially. So rather than being in a situation of high inflation, which we are in now, and that's my view, I don't believe in the government stats at all. Interest rates should be higher in yield. Cryptocurrency in my mind will bring in deflation, hopefully, and cut those costs and cut out the middle person. But in saying that, the middle person will be cut, unemployment will rise. Going even further, I believe that monopolies will eventually go, or oligopolies, where companies control everything and they have pricing power. I'm hoping that will change as well. If we look at the next slide, extreme capitalism, as I see it at the moment, will change, and there'll be much more, empathy towards the poor. And there are so many poor, and it's getting worse. I'm hoping that the cryptocurrency will be groundbreaking, and it will change the whole fabric of society. One thing for sure with cryptocurrency, it'll increase speed. People will be able to be identified globally, so hopefully it'll reduce crime and fraud. Hopefully cryptocurrency technology will put resources where they need to go, okay? Hopefully it will bring more diversity amongst, politicians or people on the European Central Bank board, for example. I saw it on Twitter today, literally 24 people on the European Central Bank board, which Christine Lagarde's on now, and 23 of them were white, Anglo-Saxon, Protestant male. We need diversity. The world is not just the white Anglo-Saxon male. It's full of, different ethnicities, and rarely do we see any ethnicities reflected on corporate boards or government boards or European Central Bank boards. And it's not right. There should be more diversity in politics and everywhere. Hopefully cryptocurrency will bring more freedom. I think going forward there will be food shortages, drinking water shortages, and again, that gives you an idea where you should be investing, say in the equity market. That's in my mind. Waste will certainly become an issue. Global warming will become an issue. Extreme temperatures will become an issue, and certainly lost habitats will become an issue. So all these areas are where I think, there is value in investing in, certainly. In my mind, loss of animals and fauna, the sea, loss of environment. Again, this is going to be a big theme in the next couple of years. Depletion of resources. Hopefully cryptocurrency can change the world there, put money where it needs to go in terms of maintaining the environment and stopping the depletion of resources. I don't know what, other countries are like, but certainly when I go to Italy and I go to Greece, there are literally no birds and there's no fish in the sea. And that's a shocker. Okay. Australia still has fish in the sea, but it's getting outfished, and we just, we can't have this, seriously. Also, in parts, as I said, there is hyperinflation in the system, and hopefully with cryptocurrency that will change. Asset classes, as we know, are still very expensive and they will become cheaper. So certainly risk asset classes, whether it be corporate bonds, equity, are extremely expensive, and I think they will become much cheaper. In other words, the market will sell down, and I sort of believe that warning from UBS that it's possible. Absolutely. I think hard assets will do well, like residential property and gold, because certainly in an environment of high inflation, hard assets do well. Collectibles, rare collectibles will do well. Old will be new again. So anything that's old was built better quality, like old houses that were 120 years old. Anything old will be new again. That's my view. I think the stuff they make these days out of China, whatever, is toxic and it's not great. I think there'll be an environmental tax, hopefully, going forward, and much more, social crowdfunding for things that are really important. I think, few people, I think what's happening now in governments, particularly socialistic governments like France, you're seeing the social system fall down because governments are pretty much running out of money when people don't work. And I think that's going to change. As I said, expensive asset classes are going to sell off. 99% of cryptos that are existing, as Brad Gallinghouse said, are not going to be there anymore. 99% of crypto exchanges, and there's probably 9,000 globally. And if you look at CoinMarketCap, there's probably about 300. 99% of those are not going to be there anymore. Cryptocurrency market hopefully will be regulated like the fiat market, and probably one day you will see with the cryptocurrency exchange market, there'll be one market like in the US with the NASDAQ and the main, stock exchange market, rather than, hundreds or thousands of markets. I think crypto will become more mainstream in the next couple of years. We'll find that, there'll be things like electric cars that drive themselves. Cars will be up in the air somewhere. Medicine, plane travel will be different. Medicine treatments will be different, more holistic, and hopefully more focus on humanity and mental illness. This is something I'm just thinking, going forward. Teaching methods could be different. Communication methods could be different. Drone travel, drone deliveries, plane taxis. We're getting a plane taxi here in Melbourne next year. Travelling short distances by planes rather than cars. There'll be zero emission. There'll be the environmental police. People growing food in their backyards like the old days, and that's what they did. People have beehives and water tanks like they did in the old days. But anyway, look, this is just food for thought. As I said, cash rates are expensive, bond rates are expensive, equities are expensive, exchange traded funds are expensive, corporate debt is expensive, fixed income is expensive. Commodities are not expensive depending on what you're looking at, i.e. gold, for example, and cryptocurrencies are not expensive. But this is just food for thought. It's not investment advice, guys. I just want you to think about it. I've had to think about it, and hopefully this helps. And I look forward to some comments. So I hope you're all well. Please do look after yourself. Please be kind to the world just in general. It's an increasingly unkind world. No, I don't really want to live in an unkind world that's critical and horrible. I do these videos and even I get, criticism, which I just find amazing. So if you're going to criticize and it's not going to be constructive, I'm just going to delete you straight away, and report you to YouTube, because I really don't want to live in that world, seriously. And that's why I've had a love affair with, YouTube, and a love and a hate affair, or whatever you want to call it, love and hate, because seriously, just you open yourself up to some really horrible people, and I just don't want to live like that. I want to just be around good people, because I'm a good person. So please do look after yourself, look after your family and friends. Please look after your parents, look after yourself as well. If you've got any mental health issues, please get help. If you're depressed or whatever, please do something about it. I've known a lot of people to suicide, so please do something about it. Please look after your animals, treat them well. Someone said, and I can't remember who it was, but it was Aristotle, if you treat, you look at a culture, and if the animals are treated well, then that's a good culture, right? So you judge a culture by the way they treat animals. I really believe that. And please just be nice, and please be nice to people you don't know, because honestly, the world changes when you're nice to people. If you're horrible, people are going to be horrible back, okay? And it just makes things worse. Anyway, guys, please look after yourself, and I hope you get something out of this. This is food for thought. Thank you.